Hey guys, how's it going? It's Andy from MagooInvesting. Welcome back. In this episode of Robinhood Top Stocks, we're going to be talking about Salesforce.com, ticker symbol CRM. And so this was kind of a weird one for me to start looking up because I originally searched the ticker symbol because I like getting more of the stock news and less of more of the everyday news that goes along with the company. And CRM, I was like, what does that mean? And so after doing some research, I realized that their ticker symbol is actually the type of industry that they're in, and that's customer relationship management. And so basically my basic understanding of it is Salesforce kind of brings together the customer and the businesses. And so they run a bunch of services through their website. I'm not going to pretend to know a lot about the company just because it's such a broad topic. When you look up Salesforce, the description on the side just says a cloud-based service based out of San Francisco. And so it's very vague, but apparently they're very good at what they've done. And so looking at their stock charts, I was really impressed to see how well they've done in the past. And then when I looked to see at their market cap, I was amazed to see how much or how high of a percentage they have in this industry. One of the articles I saw was pretty close to 20%, and now I believe it's close to 25% of the market share is all in Salesforce, which is very impressive considering some of the companies that they're going up against, Oracle, SAP, a little bit of Adobe. They're massive companies, and Salesforce has outpaced them in this smaller industry. So in this episode, I'm going to be breaking down what I see about the fundamentals of Salesforce, and then go into the charts, talk about what I see on the charts themselves, and then look to see what the analysts have as the 12-month outlook for the company. And before we get started, I got to say that I'm not a licensed financial advisor, so I'd highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I'd really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. So as I said earlier, I really don't have a very comprehensive understanding of how the company works. All I know is that they seem to be really good at what they do. Just looking at the charts for the market cap, just how much it's increased over the past years, the news about them acquiring a bunch of other companies to expand their growth, I'm really impressed with what I see on the fundamentals. Pretty much every aspect that I look at for fundamentals looks really good. Their debt to equity ratio is super low, and so I have no worries about them going bankrupt in the future just because they have such little debt. In addition, they spend a lot of money on their research and acquisition, so they have plenty of expansion for the future. The only thing that I look at that I'm kind of worried about is their P to E ratio, which is their price over earnings ratio. And so this is kind of a very broad term used for fundamentals when looking at how much money the company makes based off of how much their stock is selling for. And so normally you kind of look at a lower value as potentially the stock being undervalued. And normally you look for like a 15 to 30 depending on what you're looking at. And in tech, it obviously goes a lot higher. And looking at Salesforce, I believe their PE ratio is above 150. Let me double check that. All right, just kidding. Their PE ratio is 121, which is definitely less than the 150 that I potentially thought. But still, that's pretty high when you talk about a lot of other companies that I've looked at, especially the competition, Oracle, SAP, those were sitting around 50. And so you can look at this as a potential that the company is being overvalued. It can also just mean that the stock market thinks very highly of this company, has just been continuing to push it up. I think it's really interesting that their P to E ratio is so high, even though the stock has actually underperformed compared to the stock market this year. I believe it's only up 20% year to date, and the stock market's pretty close to 25%. And so when you look at some of the competition like Adobe, that's pretty close to 40% this year, I think it's really interesting. And what I think it comes down to is the acquisitions that they had this year. I believe they had a large one this year and then one in 2015 and 2017. And so the market kind of is very iffy on how acquisitions look for a company. When the news comes out, usually it's kind of met with mixed results. And so based off of all the articles I saw, the acquisition from this year led into some questions about whether or not Salesforce can push increased profitability from their company or whether or not they have to acquire these new companies to make the money. And I kind of understand where they're coming from, but it doesn't make a lot of sense to me considering, they just bought this company, so now they're all one. It'd be like looking at Disney and then kind of faulting them for buying stuff like Marvel and Hulu and these massive acquisitions and saying, can they not make as much money as they want by themselves? Do they need these other companies? Overall, I think the longevity of the company is helped by this news, but the stock price may not reflect that immediately. Speaking of the stock price, it is sitting very close to its all-time highs, and sitting close to it, never really a good thing in my opinion. Another problem I see is this is going to be the fourth or fifth time it has tried to break this resistance and has failed to do so far. And so in the past, I've talked about how earnings are one of my favorite ways to break through a really solid 52-week high resistance. and earnings are kind of far away. So that's kind of a reason why I would err on the side of caution for taking a position in Salesforce, just because I think it's going to go horizontal for a while. Horizontal, when I see a chart that's gone horizontal for a while, I immediately think swing trading. It's at a 52-week high. I have set my alerts, and when we go on the computer, I'll show you where I set those alerts. Just because if the stock can go horizontal for a while, those are some really reliable swing trades. So until it can break out of this horizontal pattern, I'm going to be holding off on a long-term position. I think long-term, Salesforce is great. I just think you got to be really patient with it. So with that being said, let's hop on over the charts and talk about Salesforce. Ticker symbol CRM. All right, so here we are today on Robinhood. Stock market's been pretty good to me recently. Let's head over to Salesforce. And the reason I was talking about it today specifically is I sorted by 100 most popular, and then when I came here, I went by analyst rating. And let's see, we've already talked about Glue. I've already talked about Alibaba. And then I came down here and I was like, Salesforce, I don't know a lot about that, but it has a 94% buy rating, which is even higher than Visa, which I was kind of surprised about. So when you come on here, it has 33,500 people owning it, which is pretty solid for a company that's not super well known. I feel like I'm pretty in tune with most of the stuff on the stock market, and I did not know anything about Salesforce until now, even though I still feel like I don't know anything. Design and development of cloud-based enterprise software for customer relationship management. Okay, doesn't really tell you a lot, but when you come down here, it does not have a dividend, but here's the PE ratio, which every time I look on a different website, I've seen it as 120, I've seen it as 150, and I've seen it as 174. So I don't know who's doing this basic math of just price over earnings. It might be the diluted earnings. I'm not totally sure, but they have it as a 94% buy rating with a rest and hold. So that's pretty impressive. As you can see, their earnings are definitely positive. They haven't missed out on expectations in a while, which is very cool to see. And then let's go down and look at the charts, my favorite thing to look at. Let's go to the 4-hour 180 day, which is my favorite to look at. And so this is kind of the horizontal pattern that I've been looking at. And so it is very close to breaking through it again. I'd say it's pretty close to the 165 mark. Over here, you can see that it tried to break it a couple times, went back, retested, pushed up, broke through it. And so normally the thing I'm looking for is earnings to push it, get the momentum to push it through this type of resistance. That's still a long ways away because the last earnings was at the beginning of the month, so we're going to have to wait 3 months until we can get another one. So for a shorter term play, I don't really like this. I am going to set an alert down here because if this thing goes horizontal, this looks like a very nice swing trade just based off of it's been in this channel for a while. 180 days, it's pretty much flat. So for a swing trade, horizontal is the first thing I think of, or when I think of swing trading, I want a stock to be completely horizontal because those are the easier plays because you have the past history to look at for knowing when it's going to bounce most likely. So when you come back here, you can see, I'm assuming this is last winter when the market fell, and then the push back up, and then this looks like they missed earnings, or this was the acquisition that the stock market was. Oh man, I don't know what this is, but the stock fell pretty hard and then recovered, and it's been doing all right this year compared to a lot of other companies. It's not had the best year. As you can see, it's gone horizontal since. Let's see, it first tried in February. So pretty much since February, it's been around at the same level. But then when you go back and look at the prior years before that, you can see just how steady it's been. And so when I see something like this, I really like consolidation. After years of pushing up very aggressively, maybe not aggressively, pushing up very well. I don't think anything about this was aggressive. I think it was just steady moving up. I like consolidation. It kind of lets a company make acquisitions like they've done this year and try to expand in the future. And so even though did not outperform the market, I think that for the long term, just based off what I've seen here, I think this is pretty good looking chart. Consolidation is great. I'm going to wait for it to push above this 165 and hold, but anything above that I think is blue sky. I think it looks pretty good. Now let's go take a look to see what the analysts say. So here we are on CNN Business. As you can see, it's up only 20% year to date, which is still great. If you told me like 1 year ago that the stock market would be up 25%, I wouldn't have believed you. But here we are at the end of December, and that's looking how it's gonna end the year. So 20% not outperforming the market, but still a very respectable percentage. When we come down here, here's the growth that I've kind of looked at. I just think is incredible. They've been pretty much increasing their earnings and revenue by at least 20% for a while now. So it's pretty crazy. Here's the 180 PE ratio. And as we come down here, it has the forecast of up 30% and down 15%. as always, I kind of can see where they're coming from. I'm more leaning to the bullish side, but I do see the 15% as the possibility to fall back into this horizontal pattern, because if we chart this out, let's go from here down to here, and don't you know that's exactly 15%. So I definitely agree with them on that one for if it potentially just goes horizontal. I think there's also benefits to it going horizontal. For a long-term position, that's not great, but swing trading, that's a good looking chart. As we go to Yahoo Finance, which is notoriously bearish on a lot of companies, I think is pretty good. They think everything is looking good on here. They have a buy up in the short, medium, and long term with a 1-year price target at 191, which is the median on CNN. So I kind of agree with them on that one. I think 15% is a very solid year for especially how fast this company has grown over the past years. I definitely agree with them on that one. So I think that CRM is good in the short, medium, and long term, and I think it's, as long as it can break above this 165 with the recent resistance, I think it looks really good. So overall, what do I think about Salesforce? Everything I've seen is pretty positive. The PE ratio was the only thing that I looked at and was like, ooh, that's kind of scary. But then you look at some of my other favorite companies. I just kind of Googled company or stocks with highest PE ratio, and AMD was up there, and that's one of my favorite companies of all time. So that kind of made me relax a little bit to see that some of the other tech giants are up there as well. So I think that's kind of something to watch in the future, but I don't think it's a red flag compared to if their debt was skyrocketing. So PE ratios, kind of one of those fundamental things that people look at. I don't really take a lot from, but when I first saw that, I don't think I'd ever seen a PE ratio that high, and so I thought it was something to discuss. I think long-term, Salesforce is a great position. I think their acquisitions are going to make their longevity increase and be better in the long term. I just think it's important to be patient, waiting for this 52-week high to break, or take a position closer to the lower end of the resistance that I showed on the charts. So I think Salesforce is in a great spot. They obviously have a huge percentage of the CRM market, and when you're doing incredibly well in your smaller sector compared to stuff like Adobe, Oracle, SAP, stuff that have more technology-based, they're not just focused on the CRM aspect of it, I think it's pretty good to find a company that's really good at what they do and they stick to it. So I think Salesforce is a great opportunity for the upcoming years. I don't think it's a great play right now, but overall, I like everything that I saw about it, and I think CRM is a great option for a long-term position. Thanks for watching this episode of Robinhood Top Stocks. If you liked it or if you learned something, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. And I'll see you on the next episode of Robinhood Top Stocks. That may be tomorrow, it may be after Christmas. I'm not totally sure yet, but I hope you guys have a great day. Thanks for watching.